I got paid $26 to sell 2 put options for Palantir stock.
Now, at first that may sound like gibberish, but let me explain what a put option is and why I got into that position in order to get paid up front.
When you sell a put option, you're getting paid because you're taking on the obligation to buy 100 shares at a certain strike price. So in this case, I sold the 11 strike price, meaning I would have to buy 100 shares at $11 if someone that bought this put option actually exercised it. With Palantir trading close to $16 per share, no one's going to exercise that put option unless the stock goes below $11.
Now, why did I pick the $11 strike price?
Well, I'm a little bit old school and I tend to look at fair value of stocks without just blindly buying them. So looking at something like an intrinsic value calculator says Palantir is probably more worth like $12 per share. Back to the current price, I would rather be buying Palantir below $12 or around $10, $11, not at this $16 per share price. The put options that I sold have an expiration date of August 18th of this year. That's 39 days from now. The reason I went out to 39 days is because the premium collected for a 39-day expiration put was a lot better risk reward versus selling something like a weekly, because you're not going to get a lot of money for that, especially with the strike price so out of the money. I also look at implied volatility rank, so something above 30 piques my interest versus selling a put option in something that has an IV rank of lower digits, lower single digits. That means the implied volatility in that name isn't really high relative to its history. So if the stock stays above $11, I keep all the premium that I collected up front. If the stock goes below $11, I'm comfortable owning 100 shares, well, 200 shares in this case, at $11, but I'm definitely not trying to buy 200 shares at $16. So one way to think about selling put options is like putting in a limit order at the strike price and getting paid for it.
With the situation with Palantir, I am selling a pretty low delta put, so I'm not making that much money. You can always get more money by selling puts that are closer to the current price in the stock.
For example, if you sold one put option at the $16 strike price, same expiration date as I was talking about, you'd be getting paid $140.
But you gotta be comfortable with owning it at $16.